You ever wondered how some people seem to have the secret map to financial success? What do they know that you don't? Today, we're going to discover the assets that can transform your life and how to leverage them to your advantage. Assets that increase your money. Assets are things that bring money to you, while liabilities are those that make your pocket empty. The more assets you have, the more cash you will accumulate. This is the key to getting rich. Here are 15 assets that are making the rich even richer. 1. Money. Let's start with the basics. Money. What's stored in your bank account earns some interest. It's that simple. But the downside is that nowadays, the interest banks pay doesn't even keep up with inflation. Despite this, saving money is still important. For example, Apple has more than $150 billion in cash. And why do the rich keep a good portion of their wealth this way? First, because it allows them to seize any opportunity that rises. Imagine seeing the perfect deal, but not having the money to invest. Frustrating, right? That's why the rich save. The second reason is that they have the chance to gain higher returns from cash payments. When you pay cash, you can negotiate better prices, in addition to lending money at high interest rates through peer-to-peer lending. If you have a lower income and are willing to take risks, there are several platforms connecting those in need of loans with those who can lend. Generally, while banks offer less than 1% interest on deposits, these loans can yield anywhere from 7% to 20%. But be careful. If something seems too good to be true, it probably is. Always use reason when investing. 2. Real estate. Investing in real estate is a really cool asset. We love the real estate market for 2 reasons. The first is that you can earn rental income, meaning every month you make money with relatively light work. If you're a bit clever, you can leverage technological innovations and choose short-term rentals, which often yield more than traditional ones. But this requires a bit more attention. The second reason is appreciation. With a growing population, more and more people need places to live or rent. This makes property prices consistently rise, making real estate one of the best investments you can make. Types of real estate assets include 1. Apartments and houses where people live and pay rent. 2. Commercial buildings that house offices and receive rent. 3. Stores and establishments that pay rent for commercial space. 4. Land that may become cultivated, developed, or just appreciated over time. Just one important detail. The house you live in is not an asset, but a liability. That's because it costs you to live in it and doesn't provide financial return. 3. Bonds. When governments or companies need extra cash, they may issue bonds that are sold to investors. By buying a bond, you're essentially lending money and, in return, the government or company promises to pay you a certain amount every month. Bonds have maturities ranging from 1 month to 30 years. They are considered safe investments because, most of the time, they are backed by the government. As you may know, low-risk investments typically yield low returns. Bonds usually generate around 3% a year, which is slightly better than what most banks offer, but not something that will excite a newcomer to the market. When the bond matures, you get back the amount you invested. You can acquire them directly from the Treasury Department or through a brokerage. 4. Stocks. Contrary to what many movies depict, investing in stocks isn't that complicated. Stocks are a way to have a share in a publicly traded company. For example, if a company issues 10 million shares and you own 1 million of them, it means you own 10% of the company. This incredible idea of owning shares allows anyone to own part of the most profitable companies with a relatively low entry cost. 5. Mutual funds and index funds. While stocks allow you to buy shares of companies individually, mutual funds and index funds bundle several companies together, letting you buy a slice of an entire set. And why is this advantageous? Because it diversifies your investment. making it safer. Statistically, index funds have shown good performance. The 5 most popular index funds are 1. Fidelity Zero Large Cap Index 2, Vanguard S&P 500 ETF 3, SPDR S&P 500 ETF Trust 4, iShares Core S&P 500 ETF 5, Schwab S&P 500 Index Fund. If you choose to buy stocks one by one, the chances of making mistakes are higher. You can't expect to be a miraculous trader who always beats the market. Competing with large institutions is quite difficult. That's where index funds come in as allies. The S&P 500, for example, gathers the 500 companies that are performing well. If one company falls off the list, it is quickly replaced by another that is thriving. The average annual return of the S&P 500 over the last 90 years has been 9.8%. Among the 5 mentioned, our favorite is Vanguard. Index funds are essential for anyone looking to build wealth in the long term. 6. Equipment. Any item that generates money or helps increase your ability to earn income is considered an asset. For example, if you're a farmer, your tractor is an asset. If you program, your laptop is an asset. And if you're an Uber driver, your car is an asset. The line between an asset and a liability depends on how these items are directly related to your income generation. For instance, if your income isn't directly tied to the car, buying a new one might become a liability. Often, people confuse the two and try to justify an expense as an asset, demonstrating how poorly they manage their finances due to a lack of self-control. You don't need to have the most expensive laptop just to watch videos on YouTube, right? 7. Patents. Patents are a powerful way to protect your inventions. For those who aren't familiar, when you invent something new, you can register a patent to ensure its legal protection. This patent certifies that you are the inventor and describes in detail how your invention works. With the patent, companies need to pay you to use your creation, and if they don't, you can sue them. Patents hold great value in business. A single patent can make someone very wealthy. The best inventions are usually backed by patents. For example, last year, many patents were registered in the US, and it's not just big companies that benefit from them. Remember the Slinky? It generated over $3 billion in sales. Scott Singer, who invented the Cushball, sold his patent to Hasbro for $100 million in 1997. The famous Big Mouth Billy Bass, that fish that moved on the wall, also had a value over $100 million. And it doesn't stop there. Inventions like the Magic 8 Ball, hula hoops, and many products you see on Shark Tank or in infomercials also have their patents that ensure their creators' protection and profit. Eat. Trademarks. While patents protect your inventions, trademarks protect symbols, words, or phrases that represent your brand. This is crucial for logos and business names. If you own a valuable trademark, you can license it to others for commercial use in exchange for payment. A curious example is Michael Buffer, who registered the famous phrase "Let's get ready to rumble" in 1992. When this phrase is used commercially, payments must be made to Buffer. Since then, he has earned over $400 million just from this phrase. Trademarks can be registered locally or internationally, but protection can be tricky to maintain. Interestingly, 1 in 5 companies in the US claims that their intellectual property rights are infringed upon by firms in China. This is often attributed to a disregard for intellectual property rights in the country, which is estimated to result in over $600 billion in intellectual property theft each year. But getting back to the point, trademarks are an important asset that can enrich individuals. 9. Brand and goodwill. Ready. Your focus should be on promoting